So if you guys want to learn how to trade options, purchase my ebook located at wordly41.gumroad.com. And basically, how did I make $945 trading Microsoft call options? So looking at 934. So let's see. 934 Microsoft. And I look at all of my what's called trades on the 30-minute time chart. So 934. So basically the 10 candle, I got into Microsoft call positions as soon as it landed on the on the 9-day moving average. And basically I bought what is it? How many? 15 in total. And basically I waited for a slight rebound from the 9-day moving average, and once I saw that the position was up more than 10%, basically our position reached 17.50%, I sold out the position. And when I sold out the position at 942, so within that same candle, I made $945 trading a couple of Microsoft call options. So basically what my game plan here was is like, okay, pretty much in the pre-market, Microsoft managed to break over the 9-day moving average, and it basically used the 9-day moving average here, and then when the market was about to open, it's basically slightly used it. And then you can see when the market opened, you can see that it managed to break through the 9, the 20, and 50-day moving average. And then out of nowhere, it managed to somewhat get a hold of itself, and it managed to break once again through those moving averages. And so once I saw that, okay, now that Microsoft is managing itself, trying to break over the 50 and 20 and 9-day moving average once again, it's most likely that's going to continue this, continuation of this bullish trend of using the 9-day moving average as support. And so with that in mind, once I saw that the position was up more than 10%, I was like, okay, I'm feeling very confident in this trade. I'm gonna go past the 5 and 10 percentage rate. I'm gonna try to aim for at least getting close to 15 or 20% now. And so once I saw that the position was, had surpassed the 5 and 10 percentage rate, I was like, okay, let's see if we can get close to now 20%. If someone got close to 20%, it actually did, reached 17.50%. So I was like, okay, that's good enough for me. That's a $900 gain right there for the day. I'm gonna, gonna call it quits and just move on to the next trade. And basically, what you're trying to do is step one, try to buy call options on a particular stock using the moving averages. Try to use the moving averages as entry points, and then step 2 is to sell out the position once it's up either 5 or 10%. And then step 3 is just to basically rinse and repeat that cycle over and over again. And the reason I say sell out once the position, where it says 17.50%, basically that's what you want to pay attention to most when you're trading. Once you see that the position is up 5 or 10%, okay, sell out the position, move on to the next trade and do the same thing over and over again. Basically, what I've noticed is that it's basically like an indicator of telling you when you should sell. So basically, I feel like for me personally, when I used to, trade in a way, I would really struggle of knowing when it was time to sell, when it was, for me, I struggled the most for when it was time to sell. And usually when I would have luck on my side, I would try to aim for resistance levels throughout the day. Sometimes that particular stock that I would trade, it wouldn't reach that certain resistance level throughout the day. Sometimes it wouldn't even reach that resistance level within that same week. Sometimes I guess my luck would just be lucked out in a way, and like I would have to take a big loss most of the times. And then there was a point where I like kind of got frustrated at a point because I was like, okay, what's going on? Like, what am I doing wrong? Like, should I be buying more, options that expire like in 6 months or a year out, or should I, continue this trend of, continue of day trading, because I feel like day trading isn't for me. That's until I notice I'm like, okay, maybe what's happening is that I'm getting too greedy and I want like bigger profits. I want to do like every trader does, that, oh, I'm gonna try to aim for a 100% gainer today, or I'm gonna try to aim for a 50% gainer, or I'm gonna try to sell out the position once it reaches this resistance level throughout the day or throughout this week. Sometimes that stuff doesn't, if you're lucky on that trade, good for you, but the possibility of having a 100% gainer is very risky, because you're playing what's called short-term options. That is like options that expire in a week or in 2 weeks. And sometimes that's very risky, because if you're risking a lot of money on the line for a particular trade to work out in your favor and it doesn't go the way you thought it would, you're gonna lose a lot of money, doing that type of strategy of trying to hope for the best and like, think that, oh, you're gonna have a 50 or 100% gainer, or you think that it could reach that certain resistance level throughout the day, when you could be maximizing your you could maximize your gains and try to minimize your losses by aiming for a smaller percentage gain. That's basically why I came up with this strategy of like, okay, if I see that the position is up 5%, okay, cool. Move on to the next trade and do the same thing. Try to aim for 10% now if I'm feeling really confident. And basically, I try to stick between those two numbers, whether the position is up 5 or 10%. Okay, sell out the position, try to move on to the next trade, try to use the moving averages as entry points, whether it's playing calls or puts. Mostly I try to play both when I'm trading, and try to have like your risk tolerance set in mind. If you're like a guy like that's like, okay, I don't want to go for a 5 or 10% gain, I want to aim for a 15 or 20% gainer throughout the day or for the week or for the month. Okay, try to come up with a game plan. Try to buy options that expire in a month or 2 months, 3 months, because if you want to aim for those type of gains, I would rather play it safe and try to optimize my strategy by playing long-term options in a way. That way I can realistically try to aim for those percentage gains in a way. So basically, step one, try to use the moving averages as entry points, whether you're playing calls or puts. Step two, sell out the position once it's up 5 or 10% or whatever your risk tolerance level is. And then step three is just to rinse and repeat over and over those two same steps, as much as you can, so that way you can have as much profit in your day trying to make money. So that's pretty much it. As always, this is not financial advice. As always, take care and bye.